Your perspective on the outlook for the city and how you think the authorities in Ghana would deal with the situation.
Yeah, thank you for having me. Currently, the situation is very dire. Generally, we can just conclude that the level of confidence in the economy has gone down, partly due to the performance of the city, especially within the first 2 months of the year. And if we look at how inflation has also ticked up in February, generally it is not looking too good for us, even though we expect it to still remain within the single-digit range. But we should also expect some inflationary pressures at least going forward.
Right.
The issue of the CD is very critical in determining what is happening now. Even though the central bank is trying its possible best to bring the situation under control, but I mean, the measures that we are seeing now are not new to the system. We have seen the central bank implement some of these policies over the years, and the results can well be predicted. So it is not in the measures are not able to effectively control people's expectations. So the expectation about future depreciations currently have not changed because of what the central bank has done. So we expect the situation to continue. We expect the city to continue to depreciate. While the $800 million that the central bank is planning to inject into the economy, sooner or later it also finish and we'll be back to square one. These are not monies or the stabilizations that might come as a result of this injection. It's not backed by any strong economic fundamental. Essentially, the central bank is depleting its reserves in order to shore up the currency. So if it is based on maybe production or change in production or change in technology or something that can increase productivity as a result of which we will be able to maybe export more or consume more local foods, that is fine. But the fact that we are just depleting our reserves to shore up the currency will not lead to any long-term effect on the performance of the city.
Right.
So
So, Emmanuel, if I can just butt in, you paint a very dire picture for the economy, especially over the long term. If, as you mentioned, we can't see a substitution of imports for locally produced goods to bring down the pressure on the local currency, as the economy appears to depend quite a bit on imported products. But the big question is in the short term. We know that there's a plan to test the Eurobond markets again. Do you think that we could see some stability with that Eurobond issue?
yes, definitely. If it comes in, and well, it might not be hugely successful as government is anticipating, but whatever government will raise in there, at least will help to show up the supply or bring in some foreign exchange, which will help up increase the supply of the foreign exchange. Also, we are expecting the second tranche of the cocoa syndicated loan. If it also comes in, then it will. So in the short term, we'll have some level of relief. But going forward, I mean, I think we should be looking at how to bring the situation under control once and forever, because no businessman is enthusiastic or will be happy about these short-term measures, which may not allow that person to plan for the long term. Always you make these businesses operate within the short-term frame, and they are constantly changing their decisions here and there. So it doesn't allow for good business planning. And if you have a government that is seen to be private sector friendly, then some of these things shouldn't be going
Right.
on. So we still have a long way to go.
Emmanuel, let me get your perspective on how all this will impact the equities markets. What's your outlook for the equities market, given the instability we're seeing with the currency?
Yeah, so if we are talking about the equity market, then we are talking about the additional risk that the performance of the currency will bring onto the market in terms of foreign exchange risk. And you know, if you look at how the Ghanaian economy works, we depend so much on import. If you look at the February figures, one of the reasons why we have the uptick in inflation is because of the depreciation of the cedi. So when the cedi is depreciation, in addition to the foreign exchange rates, you have inflationary rates to also coming on board. So these two effects should have some damping effect or a dim effect, or not too so bright
Right.
outlook for the currency, for the equity market, especially within the first quarter of the year.
Yes.
Because you know the market very well. We have some level of foreign participation on the market. So definitely they will be worried about the depreciation of the cedi.
No doubt foreign investors will be very worried about the weakness in the currency. And I guess this leads me to the question around how the foreign investors are likely to behave moving forward. In Nigeria, for instance, we've seen foreign investors play a very important role in stabilizing the currency as they buy the local debt instruments. Many will suggest that perhaps the Bank of Ghana moved too quickly in cutting interest rates. Do you get the sense that they have more or less lost the confidence of foreign investors now? Because we are seeing that foreign investors are not getting as invested as they used to in Ghana right now.
That was a shocker. The reduction in the policy rate, it was a shock to many of us who are watching the market, because at that time we were having some level of depreciation and increased inflationary pressure. So most of us were expecting the central bank to more or less maintain the policy rate or even increase it a bit. But the reduction didn't send a good signal to the market, as if the central bank is not monitoring the situation very well, or is being influenced by maybe powers beyond the governor of the central bank. Because if government is bent on reducing lending rates so that its policies of private sector-led growth will come to fruition, so that the banks will be able to lend more money, and you also have the central bank interested in easing when you are likely to miss your inflation target and put the currency at risk. I mean, you are sending a very bad signal to the market. So the reduction actually didn't go down well with most of the investors. It didn't send any good signal.
But Emmanuel, can I ask you this question? Do you think that the Bank of Ghana has lost the confidence of those investors, or do you think that they can take back this decision and, if you like, begin to immediately begin to raise interest rates again and perhaps get the confidence of these investors again? Do you think that that could be something on the table right now?
Yes, it's a possibility, because I think somewhere next 2 weeks or next week, the Monetary Policy Committee will be meeting again. So to draw a conclusion that maybe currently they are not managing the situation well, or they have lost the confidence of investors. Let's see what they will do in the next meeting, which will be in the next 2 weeks. Right. Let's see what they will come up with. Then we can conclude whether they are actually keeping their eyes on the board.